Welcome back to exoticcarplayplace, everybody. Thanks for joining in again. Today we are talking about supercar ownership. And if you saw last week's video, you saw what it took to search for the right car, to make sure you didn't buy a bad version or a bad car, and moving on to the next step, which is today we're going to talk about how to pay for it, how to buy the car outright. There's several different options, so let's get into it now. So now we're on the path for buying a new or used supercar. One is buying cash. The second one is actually borrowing money from a bank or a lender in particular. And the third is a lease. Now there's benefits and negatives to all three of these options. And then you'll have a better idea what is the right selection for you, whether you're buying a supercar or whether you're just buying a premium luxury car. So the first thought process is buying the car cash. You've got the money, you can obviously afford the car. You lay the money out, whether it's $100,000 to $300,000, maybe it's only 30 grand, whatever that car is, you've got the cash, you're going to outlay that money. Now the car is yours. You don't own a penny on it. And you're not paying any interest charges, so that's a benefit. And there's no worries about the bank hovering over you trying to take that car out of your possession. So there's definitely benefits in buying a car cash. Now the negative to buying a car cash is the fact that if you put all of your money, let's say you spend $100,000 on a used Lamborghini Gallardo like this, you put $100,000 into it, you now have a car which is a depreciating asset. So in other words, it's losing money day by day, month by month. That becomes a bit of a waste of money because you're better off buying the car through a low interest rate, because in most cases nowadays the banks will give you a relatively low interest. There's lots of options. Often some manufacturers will sell a brand new car, for example, a new BMW for 0.9%, 0.8%, maybe even 1.9%. These are low rates. There are some cases even buying GM. For example, we're talking about the new Corvette. We know that's coming up quick. Well, sometimes GM offers specials as low as 0% financing on approved credit, of course. So if your credit rating shows you're a secure lending person, then sometimes these dealers will offer you a 0% finance rate. So essentially, you can now put that money elsewhere, pay your basic principal, but put the money into an investment and just make payments on the car. And that money, that investment can actually yield a benefit, whether it's a business, whether it's stocks, whether it's some other opportunity that can return some money on your investment. Now you can put that money in the bank. You're going to spend it anyway on that car, but if you maintain the principal and you don't spend it or overcommit, you can actually make money on the fact that you can borrow through a low interest rate. And you really have to crunch the numbers to get down to the details, but often there are options. You're better off in most cases investing the cash elsewhere versus just spending it outright cash. So let's talk about the lease option first. So there's some negatives and there's some positives. Let's move into the negative side of leasing a car. First, like this, for example. The negative being, of course, the insurance is often going to be higher because the lease company is going to dictate how much coverage you want to have on this car. You don't have the option. They own the car. You don't own the car. When you lease a car, it is essentially like borrowing it. It's like renting the car. You are paying for the depreciation, nothing more, nothing less. And as a result, the insurance companies are going to have their take on it. Another negative to leasing a car is often what happens is they limit you to the amount of kilometers you can put on in a year. If you lease a cheaper car, for example, you might get away with 20,000 kilometers plus before there's a penalty. But if you lease a BMW, Audi, Benz, maybe even a supercar, the rules are much more strict. And often you may only get 10 or 12,000 kilometers per year before they start hitting you with penalties of anywhere from 20 to 30 cents a kilometer, which can really add up quickly. Not only that, any kind of damage on a lease vehicle, say for example a broken windshield or something banged up or dented or something just out of sorts that seems like out of the ordinary, you are on the hook. If you're not going to make the claim through insurance because of a high deductible, you are often out of that pocket that amount of money to fix a $7,000 windshield, or a $5,000 mirror, or any number of things. You are on the hook for that. As a lease, you have no option of living with that failure or flaw. So that's another negative. Now, some positives on leasing a car is, number one, often if you crunch the numbers, and let's say you have a $300,000 car, like say a brand new Lamborghini Huracan. Let's say you put $20,000 down and roughly at a 3% interest rate, and we'll say for equal measurements, we'll say use 3% for both the finance calculation and the lease calculation, even though often lease rates are a little lower. Let's just say for all intensive purposes, what ends up happening is the lease rate is about half of what you would pay for the finance version. So a $300,000 car would end up costing you potentially $3,500 per month at a 3%. Whereas if you were borrowing money with a minimal down payment, even at a $20,000 down payment, monthly finance payment for a $300,000 car could cost you as much as $7,000 a month. It's staggering. Now, the benefit, of course, with the purchase is you will own the car. You're buying into the equity. One more negative to leasing a car happens to be if you decide to modify the car. You have a supercar, you want to put a wing on it. Maybe you have a turbocharged car, maybe a new turbo BMW, and you want to chip it or you want to tune it, make it go faster. Maybe you want to put a new stereo system or tint the windows. Any number of those modifications are subject to scrutiny by the lease company, and often you'll have to rip all those parts out at your own expense. Sometimes those parts removals are not easily reversed, and as a result, it may even leave damage to replace it or return it, in which case you'll pay a much larger fine to return that vehicle. So now let's talk about some of the positives and negatives to purchasing a car. Now, firstly, before we get into that, did you know that the rule of thumb is 48 months or 4 years? Many financial experts suggest that if you don't have the funds to pay monthly for a 48-month loan, that you probably don't really have the funds to really properly support and purchase that car. You may want to consider a lower end vehicle at that point. And that's largely to do with by the time you're past 4 years, the depreciation is offset. You've wound up in a place where you're at a negative return on your investment. It's just a bad place financially to be, where you're putting more money in than the car is worth. So that's where the 4-year mark is a nice healthy number. You still got some warranty or often parts of warranty left. So the 4-year is a healthy place to be. Gauge for that. Budget for 4 years. Now, the positives to buying a car, borrowing, financing a car, whether through the dealer directly or whether through the bank, is that after your 4-year term, you will own that car and whatever its final equity is actually valued at. Now, if you buy a supercar for $300,000, maybe after 4 years, that car is actually still worth $200,000. So you've definitely lost some money. However, if you put that money into a lease, you've lost that. So there's definitely some built-in equity to be had if you purchase the car. You will have some residual value there. Another positive is the fact that you can modify it all you want. Once you start making loan payments, you can do whatever you pretty much want with the car. Now, what's a negative is the fact that, yes, the payments are much, much higher because you're paying for the depreciation, you're paying for the base value of the car, and you're also past 4 years, 5 years, you're also going to be paying for additional maintenance and repairs because often leases cut you off at 3 years and loans often take you 4 years or beyond, as I said before. So you will start to see some maintenance related costs associated with purchasing the car. Now, what if you get to a point where you're in the middle of a lease or a loan payment? What's your better option? Say you're not 100% sure and you think you might have to dive off board somewhere in the middle of your term. Well, a lease is where they really stick it to you. So be aware that if you're only a year into a lease and you decide I can't afford it or I don't want this car anymore, you will have to likely pay the equivalent of the entire contract anyway. They don't care what the facts are behind you and your finances. They want to get paid. They've committed that vehicle, and the contract states that thou shalt pay for 3 years. You will pay for the 3 years. There's little or no recourse on that because it is a written contract. However, if you buy a car and you get 2 years into a 4-year term and you decide I don't want the car, maybe I just want out, often you can negotiate with the dealers. They can purchase the car back at a loss, of course, but you can often get out of the vehicle, pay a differential, or just take a little bit of a hit and move on to your next vehicle. So there's definitely benefits and negatives to either leasing or purchasing a car. Supercar like this, again, in summary, if I can say, how much does it cost to buy a brand new Lamborghini Huracan if you have a minimal down payment, if you qualify and your credit rating is top shelf? Well, for a $300,000 Lamborghini like a Huracan, you could probably get that car for about $6,000 to $7,000 per month based on a loan rate. If you just want to lease it, you put down their bulk amount on the front end, you drive it for 3 years, you give it back, you'll probably drive that car for somewhere between $3,000 to $4,000. And again, as always, guys, I'd love to hear some comments down below if you have some better ways to save money when shopping for a supercar. As well, don't forget to hit the link over here. That'll take you to a review of a Lamborghini Gallardo. And the link over here will show you last week's video, which is really shopping for a supercar. Some of the ups, the downs, the negatives, the positives, the things you want to look for when buying an exotic sports car. Hope to see you guys on the next one. Can't wait. See you then. Bye-bye.